Welcome to Trade Pro. Here I have the most profitable trading strategy I've shown. I'm going to test it 100 times in a row so you can see how it performs for yourself. This strategy includes two multi-time frame EMAs, a MACD indicator, and divergence. When combined, this strategy gets some fantastic results. Out of the 53 trading strategies tested, this one takes the #1 spot. So I'm going to go over the strategy, do the testing, show all the results at the end of the video. Let's go. All right, so I'll start out by showing the indicators and their settings, then go over a couple examples using the strategy so it all makes sense. If you want to see a more detailed video about the strategy itself, where I show a bunch more examples, check out yesterday's video. I'll link it in the description. It's essentially this strategy, just going over a bunch of examples with it so you can kind of get a better idea of how it works and see more examples. But anyway, let's get into the indicators and their settings. So up here, the white is multi-time frame EMA, same with the purple to multi-time frame EMA. You can simply search MTF EMA here, and the one I'm using is the very first one by FX_Massa. The setting for the first one up here is hourly 50, and then this one is a 15-minute 50. So essentially we have the hourly 50 period exponential moving average. We have a 15-minute 50 period exponential moving average, and we're on the 5-minute time frame for the price data. So we kind of get a multi-time frame perspective of the trend. So the first rule with the strategy has to do with these multi-time frame EMAs. When the 15-minute is under the hourly, we can only look for short positions. And when the 15-minute is over the hourly, you're only looking for long positions. So let's go into a trade example here. The next thing you have to find after identifying the trend direction with the multi-time frame EMAs is divergence with the MACD. So we want to see a higher high on the price action, but at the same time, a lower high on the MACD for a short position, and the exact opposite for a long. We would be looking for a lower low on price, but a higher low on the MACD. A couple other important things that need to happen with the MACD. We need to see that the MACD and signal lines are above the zero line of the histogram for a short, and that the MACD and signal lines, the blue and orange lines, are below the zero line of the histogram for a long position. Another thing is, for spotting a divergence, in this case a bearish divergence because we're looking for a short, you need to make sure that when these lines come up and then come back down and come back up again to create that lower high to get the divergence, that in between that happening, they never touch that zero line of the histogram. So it needs to kind of float up here, make one high, get that gap in the histogram, and then without touching the zero line of the histogram, get that lower high to create that divergence. So price action, higher high, MACD, lower high, and we get that gap in the histogram. So we go green, down into the red, we get that red gap, and then lower green peak. And then our entry for the short position is on this next cross down with the MACD. So right here on this candle. So we get the bearish divergence, we get our entry signal, we enter, and then for the stop loss, we're just placing that above the swing high plus 2 pips for a buffer. So if it's 14.8 here, we're going 16.8 pips for the stop. And we're gonna target 2 times the risk, okay? So this one is in fact good. Now let's go to a long example over here. I'll zoom out a little bit here. So for a long, obviously we need to make sure that the EMAs are telling us to go long. So 15-minute EMA is over the hourly. Then we look for our bullish divergence with the MACD. So as you can see, price come down. We get a lower low on the price action here. But at that same time, MACD gives us a higher low. we get that gap in the histogram, and it never touches that zero line in between that divergence happening. So our entry is that next cross up. As you can see, entry is right here. Stop loss is just 2 pips below that low. And we're targeting 2 times the risk. All right, so I'm just going to show those 2 examples in this video. If you want to see a more detailed explanation of this strategy and just overall explained a lot better and more clearly, check out yesterday's video, which I'll link in the description. But I think it's time to get into actually testing this strategy 100 times so you can see how it performs over a series of trades. I'm going to go over the MACD settings here real quick since I didn't do that. This is just default for the trading view, so it's fast is 12, slow is 26, source is closed, and signal smoothing is 9. All right, so anyway, let's get into the 100 tests and see how this thing does. The results are in after the 100 back tests, and this is now the #1 trading strategy that I've tested on the channel with by far the best results shown. This strategy did phenomenally using a 1-to-2 risk reward ratio on the 5-minute chart. Took 6 months of price data to find those 100 signals. There were 60 winners and 40 losses, giving it a 60% win rate, which is very good for a 1-to-2 risk reward ratio. Most wins in a row, 9, and the most losses in a row, 4. The gain on the account, 80% if you're risking 1% per trade. So you know what that means. If you risk 2% per trade, you make 160% on your account over the series of 100 trades, not including fees and spreads, which is a big factor. So you do need to account for fees and spreads as well when you do your own back testing. But anyway, this one was very good. I'll pop it up on the spreadsheet and see how it compares to everything else. But I think we already know based on the title and seeing this, it is the new champion and the #1 spot holder for the best test done on the channel so far out of over 50 tests with different strategies. Ladies and gentlemen, we have a new champion on the spreadsheet. After 53 trading strategies have been tested, a new first place finisher has been crowned, taking the spot of the previous first place finisher with ease, with a 6% greater win rate and 18% greater gain on the account, taking the same amount of time to find those 100 signals. Just a fantastic job with this strategy. So, after testing so many strategies, anything that falls in the top 10, is pretty solid and you can definitely work with it. So I definitely recommend checking this out and trying to optimize it. It's not optimized whatsoever. I just threw it together with some random parameters and it did really well. So definitely worth a look at. This second place now was previously the first place holder for so long, and this one just smoked it. So definitely worth a look into this style of trading. But this is not the peak of trading strategies. Only the people on the Patreon would know how I can improve this and combine it with other things to get an even better win rate and gain on the account figure. But that's all I'll say for this video. Hope you guys enjoyed. Pretty awesome to see a new highest profiting strategy test. Don't forget to subscribe and like the video, and have a fantastic day.